Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Thursday afternoon. I've always loved a Thursday. I'm Nadine Blaney and this is AusBiz. So you win some and you lose some. The market giveth and it taketh away. Today was one of those sessions. We knew it was going to be a bit of a rocky start. So after all of that enthusiasm in the wake of the inflation data yesterday, we did see this market come out of the blocks, lose ground initially, I should say right away. By 11 a.m., things were not looking good. Picked itself up around lunchtime, as you can see on screen. That's the CBOE Australia Index, but continued to be sold off through the afternoon. And look, the S&P ASX 200 is now below the 9,000 level, which it closed above yesterday. Week to date, still putting on 2%, but if misery loves company, it wasn't just us that was lower today. Clearly, we had that really weak lead-in from the United States. And as I look around the region, I mean, we've got some steep falls happening for the likes of the COB, for example. It is down by 1.25%. We've also got the Chinese mainland market, the Shanghai Composite, off by 0.5%, the Shenzhen Composite down by more than 2%. So a negative session, and as I do, checking in on US futures, they are mildly positive, but again, we're digesting a lot, aren't we? We have oil prices to consider. That's feeding into inflation. We had the FOMC meeting, Kevin Warsh and team, leaving rates on hold, though many in the market are questioning why, why not move now? So that all contributed to this Thursday tumble, along with some of those big tech earnings that we've been hanging out for and that were a bit mixed overnight, to be honest. We saw Microsoft, as you know, moving forward. But we do have, as you can see there, one of our key themes, an A-list check still coming up tonight in US tech, with Apple and Amazon results still to come. Meta was a big disappointment. Now, Domino's don't fall. That's an interesting one, isn't it? Because Domino's is one of the best performers on the 200 today. If you recall, my friends, yesterday, Domino's was one of the worst performers. And I remember at the time thinking, I don't remember seeing any news associated with that. But sometimes I have to check myself. I can't get across everything in a day. But it wasn't until about 6:30 after the close yesterday that Domino's released that announcement saying that it will be notching up a loss in FY26 because of a $300 million write-down. So go figure, seeing the shares higher today. Speaking of shares, let's take a look at the sectors. And look, gold has not glittered at all today. The likes of Northern Star, which, we're having a good week, off by 3%. Evolution, Newmont, Ramelius, and Genesis. We're also still getting a lot of those quarterly reports coming from some of these miners. Consumer discretionary names, after having a great session yesterday, giving back today. Wesfarmers down by 2.4%. I do note that I think it was RBC came out with coverage of Wesfarmers, initiated coverage, as they say, for the first time, and we saw it come out with a negative view on the stock. But yeah, I'd say a bit of selling after yesterday's rally. And technology as well, we've been keeping an eye on. Interesting to note that WiseTech had a pretty good session, and that is despite the sell-off in tech names in New York, obviously. Just checking to see the news there. Nothing really obvious that I can see. Xero up by 1.3%. So here we go. Domino's Pizza, it surged 8%, upgraded its profit guidance ahead of expectations, although also reporting around $300 million in write-downs. NAB was out this morning, bit of a business update saying that home loan applications fell 15% in the June quarter. Business lending balances, though, rose 4%. That's the strongest June month for business lending since FY22. PLS, one of those companies reporting its quarterlies, delivered a very strong quarterly report and guidance broadly in line with expectations. Bosso was down, that's despite meeting FY26 production and cost guidance. Aperion X dropped despite higher titanium powder production in Virginia in the June quarter. Look, that's a little bit of a taste of what went on out there today. Let's get what it all means, of course. Welcome back to the COB, Jimmy Jang, who's joining us from GBA Capital. I like to start broad, Jimmy. What do you make of today's performance when you consider, we're up by 2% over the week, and yesterday was really strong?
Good to be back. Yeah, look, obviously the main catalyst that all the investors are kind of eyed on today's session was the Fed Reserve's decision to keep the interest rate unchanged. Like many of us kind of were expected, it was largely unexpected result, but at the same time, there was also big supporters of let's rip the band-aid early now and just kind of get done with, because it is almost certain that we're going to see a higher and higher inflation rate coming out over the next 2 quarters as well. So there's obviously persistent in inflation. Obviously, is the main concern that the investors probably took out of yesterday's minutes when the Federal Reserve new chair Kevin Walsh obviously spoke about that they're reiterated that their inflation is still they're very well focused to keep it at 2% target, which is what they are intending to do. And obviously the ongoing conflict in the Middle East is not really helping with the inflation, with the high energy cost as well. So market in general in the US obviously had a pullback, but it is quite interesting to see after the session has ended that US futures kind of pointed toward a bit of a modest rebound. I think that's also probably something that the Australian investors also took as well. So that's probably one of the reasons why we didn't see such a harsh sell-off other than compared to other days. But yeah, gold is still the main focus. So obviously, markets now definitely pricing in a higher yield. So the government bond yields start to move, obviously very quickly. So guys like Genesis Metals, Minerals, Resolute Mining, Northern Star, some of these key, producers had a big, harsh sell-off today. But it was really interesting to see though that the price of gold is still at that very strong 4,050 US dollars per ounce level. So the price of gold hasn't got any movement, but I think that the investors just kind of moved ahead of time for the gold price to potentially drop. But the rising inflation expectation obviously do have a very negative impact for the gold, but we kind of have a very different view that the gold price will actually get higher from here onwards, because even if the yields gets higher in the government bond level, it is also will be very difficult for the government bond, especially with the level of debt the US is currently going. It probably will be putting a lot of pressure for the governments in the US to kind of repay back those bonds that they started selling 5-10 years ago, which was at a lot more lower interest rate. So I think a lot of the people will start to use gold as what they used to be used for, unlike last year, which is bit more safe haven. So we're actually calling on the fact that the gold price will go higher from here onwards.
Okay, so you did mention a lot of those gold miners that got hit today. How do you play it though, Jimmy? Do you look in the big end of town, or are you happy to have some exposure to some of those relatively smaller names?
At the right moment, Nadine, I probably will be no to buying any of these gold miners in general. What I am doing at the moment actively within my own client's portfolio is actually going long on the spot price of gold. So there's a lot of great ETFs out there. So for example, the one that we recently took a heavy exposure in a leverage exposure to the price of gold is GLD, which is listed on the New York Stock Exchange. But there are all the other great ETFs out there in the Australian market that takes exposure of the gold price as well. But in a market like this, Nadine, especially when the energy prices is the main focus for a lot of the miners, even though the gold price, like what we saw today, might not move at all and be resilient, but a lot of the investors might put that as a caution to how quickly can these miners actually go through that production, even though that the price of the energy cost or the price of the production will increase. So they'll eye all of that in the next 2 quarters when they release these reports. So I'll probably be either a hold or a sell at this level for the gold miners, but I'll probably be very bullish in the actual spot price of gold as a whole.
Okay, let's get to some of the company news from today. Look, Domino's Pizza rose today. Do you think that the rise is justified? Is this company finally turning around?
Well, Domino's Pizza, very interestingly, traditionally as well, has done really well in a bear market, and that's largely because Domino's Pizza is where you go to for a lot more cheaper food source for very resilient high inflation era, and that's what Warren Buffett also said it before he added Domino's Pizza into the portfolio last year. Obviously, caught a lot more earlier than a lot of people, but Domino's have shown really good results. So they recently, about 6 to 8 months ago, closed down their Asian operation, obviously due to cutting down the costs, and they also issued, obviously, like you mentioned, Nadine, last night, issued better than the expected profit guidance as well. Obviously, one of the things you also mentioned as well is that $300 million in write-downs, but investors are actually a lot more focusing on a stronger outlook for the Domino's. And even myself, I also have a small portion of this in our client's portfolio as well. And it's also just going to get looking better for the company. So it is also good to see some love from the ASX as well, because there's big disproportion between the US Domino's market and also the Australian listed one. So it's only a catch-up game, I think, for Domino's for here onwards.
Okay, so that is Domino's. There was a bit of news out today. A lot of those quarterly production reports coming through from companies that included PLS. A little bit of a lithium, I guess, push going on in market right now. Are you a believer that the sort of supply-demand dynamics might be resolved to a certain degree?
That's a very good question, Nadine. And I think as a lithium as a whole, next 12 to 24 months guidance, it is looking strong. Obviously, one of the key factors that will play is the Chinese economy. Obviously, electric vehicles, majority of the consumption is done in China now, and also a lot of the lithium, electric vehicle manufacturers are based in China, selling into Western countries like Australia and the US. So even in Australia, for example, the level of Chinese manufacturers coming in is very aggressive. And if we see a higher demand for electric vehicles, the price of lithium is only going to get higher as well. So that's what PLS obviously did. They delivered a very strong quarter result. Their financial year 27 guidance is largely all met the expectation, and they also confirmed their forecast of a higher lithium production as well. But one of the main concerns is just the car manufacturing business as a whole. So even if you look at China and also in Germany, in Europe, and a lot of these consumption or the car purchases have declined dramatically, largely because of the age group between 20 to 35 hasn't really been purchasing as aggressively as what we saw 10 years ago, and that's because the need for cars have reduced dramatically, especially after COVID, with working from home, culture looming in. So that probably also might have to change as well for the lithium price to come back, because the consumption of cars is very important for like lithium. But in terms of PLS, their guidance has been met, is also good results. So definitely, if it's not something the clients will have, it's probably good to really have a strong eye on their watch list as months unfold.
Okay, now I speak with a lot of people who are very bullish on uranium, bullish on the whole nuclear narrative and the belief that nuclear will solve some of the problems that we have, but still reticent to invest in not just for uranium producers, but particularly Boss, because it's had some execution issues. Did today's update go any way to resolve that?
Yeah, I mean, it's a very tough one. Uranium as a sector is very difficult right now. So Boss Energy, like you mentioned, they did meet largely their 25-26 production and cost guidance from what we read. But when a whole market, or especially the sector, is on a risk off session like today and yesterday, it is very difficult, and it's not enough to just meet the expectations. So one of the, I think, driver in the industry is obviously the Lotus Resources, LOT, done a placement at a shocking 60% discount, and it's still hovering around that 22 cents to 26 cent mark. So that's also putting a lot of pressure on their peer stocks as well. But uranium it's either your absolute bull or your absolute bear. There's no one that I'm sure you can relate, Nadine, that's in the middle for uranium. So it's also more like you just need to either believe it's going to do. From my end, it's a very risky sector. There's much more better stocks out there in the market right now, especially in a risk-off session like this, like today. So for me, it'll probably be something that will probably on my watch list if we see a better sentiment as in the sector comes through.
Okay. And look, Jimmy, I don't know if this company is too small for you to really pay a lot of attention to, but I would like to ask about Hyperion X, because it's one of those companies that gets a lot of sort of hot money when it wins these US government contracts, so that there's indications of it. But it's a little bit of a touch and go situation for this one as well. Do you know it? Do you like it?
So what was it? Name of the company?
Hyperion X. Are you covering that one or no?
Hyperion X, yeah, Hyperion X. So obviously it was a pretty disappointing, quarterly trading update that they released, and it is again a very tough one to add. For example, some of my clients that had this big exposure in the company because of their increased titanium powder production out of its Virginia facility during the June quarter. So it seems like the market is obviously looking for much more in the company than what it is obviously trading today. So at the moment, it's a very big hold because there is a bit more probably coming out from the company to justify this kind of result that obviously, or trading update that it is giving. So if we see a bit more higher volatility in the market and Imperial X is actually holding, then it's probably a good buy. But as a whole in the sector, it's pretty difficult to recommend a buy at this level. So again, it's probably a hold for me as well.
All right, so Jimmy, we've got a couple of big tech earnings in the US. I mean, this has been a big week in terms of event risk. How are you feeling as an investor right now? I know it's a bit of a touchy-feely question, but are you an optimist or a pessimist?
You always can be optimistic in the market like this, Nadine. Obviously, the main thing that investors should be really looking for is U.S. market is very important at the moment. However, the Asian market is actually driving majority of the fear right now. So, like you just briefly mentioned in the beginning, KOSPI, which is a South Korean index, had a big fallout. And it's quite amazing to me that people thought that wasn't going to happen, because if you actually dissect into the index, Samsung and SK Hynix, which are the two leading semiconductor companies in South Korea, is taking nearly 60% of the index. So when two companies taking majority of the index, that's much more bigger than the ASX as a whole, then you really need to be on that risk off mode, right? However, obviously some of the semiconductors over in the US, like Micron Technology, for example, when they had a lot of their reports getting harsh with feedback from the investors, that puts a very hard pressure on the companies like SK Hynix and Samsung. And with SK Hynix listing in the Nasdaq as well, that put a lot of attention. However, at the same time, with the new AI coming out, Kimi, for example, in China, that also shows to the market that maybe we don't need a very expensive semiconductor chips like Nvidia, Samsung, or SK Hynix, when China can do it at a much more fraction of the cost, but as effective as the OpenAI or other Anthropic, for example, over in the US. So those are the things that I think should be very much in focus. And then after that, another thing is the bond yields, as I mentioned earlier. So bond yields obviously puts a lot of pressure to the equities, but also another thing we should be looking for is how quickly can this company make money. So I'm a big believer in AI. I think AI would definitely be a good pickup at this level, like SpaceX, for example, when they got listed. They show a strong uses of AI and Meta and Google also pouring money into AI space. So it's more so if we see a slow signs of the AI businesses actually making money, then the demand for semiconductors, whether it's as effective as Samsung or Nvidia or as cheap and effective as Chinese one, it will all have a very strong run. So I think optimistic is probably my good answer.
I'm going to roll with that. Thanks, Jimmy. Nice to see you again. Glad you're back in town, and we'll speak to you soon.
Thanks, Anita.
Take care. All right. We did things a little bit differently on the call today, just to keep you interested, of course. In the wake of the blockbuster tech earnings that we've already had, we thought we would pick Amazon as the stock of the day. Of course, it reports overnight. Lots of focus on whether its AI-driven momentum can keep delivering. So we thought we'd ask about it ahead of time. Kai Chen from MPC Markets and Mark Moreland from Value 3.
No, absolutely. I think, Amazon, in terms of AWS, is definitely the biggest cloud provider in that space. And, the question as to whether they've actually delivered to expectation or not, you just have to look at the Q1 results, right? So beat by about 70% against the consensus. So their EPS came in about 2.78 versus 1.63. So they are making a lot of money, right? So there's no question as opposed to whether the uptake is there. I think really what everyone's really looking at is the CapEx expenditure and whether, relative to what they're earning, are they making too much of a big bet?
At the moment, the whole thing's going to change anyway, because what's happening is there's significant pushback on the model companies, so the OpenAI and Anthropic, because they're actually seeing everybody's data, and then they're now actively trying to get into commercialising stuff in themselves, which means they're a threat, and everyone's worried about their data being seen. So part of the argument with open source models is you can run them on your own servers and so on, but there's a bigger play here, and that is the whole orchestration and the harnesses of how companies deal with running their AI. And I think Amazon, Google and all the hyperscalers are all in a fantastic position to be able to make a lot more money out of it and shift all of that earning that's currently going to Anthropic and OpenAI. I think it's going to go to them.
Yeah, it was an international stock special, and the passion that my guests had for a couple of those stocks on the list was pretty good. So if you'd like to take a listen, I encourage you to go to the website to find the call, ausbiz.com.au, if you're not already there. And of course, you can listen to it in podcast form if this is your thing. All right, let's take a look at some of the leaders today. Domino's, as we said and just discussed with Jimmy Jang, up by 8%, $19.49. WiseTech doing really well. MinRes still in the afterglow of its production report, which really impressed yesterday, up by 4%. PLS today, and Viva Energy as well reported yesterday. Some broker moves today, up by 3.5%. Some of the laggards, though, you can see there with Liontown Resources suffering yet again in the wake of its production report. Champion Iron was out today. Hyperion X, which we just discussed, in the mid to small cap space. OneView Healthcare, I don't know why. Wish I did, but it's up by 18%, and Serco putting on 11%. Not all performed this well, though. Clearly, we saw Canyon Resources down by 13.5%, and Coronado Global down by 11.5%. Okay, what's happening overnight? Well, we have a BOE interest rate decision. It's been sort of overshadowed, I suppose, by the FOMC as well as all the big tech earnings. Still important. We get Eurozone second quarter GDP. Wonder how all the fires and the extreme heat will impact that data. We've got GDP for the second quarter in the US. CapEx spend will likely be the driver there. PCE price index and initial jobless claims, as well as those earnings from Apple, Amazon, MasterCard, not to be ignored, and Shell. Tomorrow here we get PPI for the second quarter. We get some manufacturing data out of China and South Korean industrial production. Interesting. BOG interest rate decision, as well as a Japanese inflation read. Also quarterly updates, so no shortage of reasons to watch AusBiz tomorrow. We have Fortescue, Genesis Minerals, Origin Energy, Capstone Copper, and Coronado Global coming out. So how did we finish once all of the day's trades went through? We've got the local market. So that's the COB Australia Index, the S&P ASX 200 down by 0.75%, 8,967.7, the finishing figure. And we've actually got Shell in the European session already reporting. It has beat expectations. I'm just trying to see the commentary behind it. Its dividend will be 39 cents US, but it doubled its profit in the second quarter, reaching $9.84 billion. So beating expectations, and I dare say that the impact of the Middle East will be mentioned in that result. I don't have time to read it all now, but there you go, a bit of a precursor to the big A-list results coming through tonight. That is the day live. We've got plenty more for you to catch up online. I hope you do, and I hope to see you tomorrow. We're live from 9:45.